Welcome everyone to Vested Interest. This is Shane back for another stock pick of the day video. It is Monday, October 21st. Yeah, we're quickly wrapping up another month here and quickly wrapping up 2024 altogether. We are going to take a look at one we have reviewed before, Target. This is out of the consumer discretionary sector. Now, before we get too far in the video, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you're subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click that notification bell so you're notified whenever we put out any new content. I do this Stock Pick of the Day series Monday through Thursday whenever the market's open. I also do subscriber and viewer suggestions. One more reason to click that notification bell and drop a comment down below. Let me know what you think of the video. Let me know what you think of Target. And thank you, a special thank you to all the subscribers out there. You guys are awesome. The channel continues to grow because of people like you. And one last tidbit here, watch time is one of the key metrics that the YouTube algorithm uses to help push the videos out a little further. So if you could watch the videos to the end, that would be greatly appreciated. Thank you so much to everyone who's taken the time to do that. Now, this is the Vested Interest Stock Screener. This is how I look at a company on a high level. It's also the metrics we'll be running through in this video. We'll check out how it stacks up at the end. Must meet 5 of 8 to make it onto my watch list. If it was a financial company like a bank, then we look at price to book as well, and it must meet 6 of 9. And again, that means it goes onto my watch list. It does not mean that I am investing. It goes onto my watch list. Then I do more of a deep dive into the company's financials, looking at their income statement, their balance sheets. I'm looking at stuff like debt to equity ratios. Are they paying down debt? Do they have more assets over liabilities? I usually like a 2-to-1 ratio there of assets to liabilities. Are their revenues growing? Are their margins expanding or contracting? All good information that you should be looking at, as well as others, PEG ratios, free cash flow, obviously, and several others that I look at. I also do a discounted cash flow analysis, kind of give a range of prices I'm willing to pay. And then and only then, if it meets the future or further metrics that I look at, do I add it to my watch list or add it to my add it to my watch list and possibly add it to my portfolio whenever it hits the right price. Now, back to Target. Check them out at www.target.com. That's www.target.com, www.target.com. That is their homepage where I pull this information from. Target is a general merchandise retailer with stores in all 50 states and the District of Columbia. You're probably well aware of Target. You may shop at Target, right? They have groceries, they have clothes, a lot of the things here. Obviously, it's Halloween and Christmas. Seems like they put that stuff out at the same time anymore. So if you want Halloween decorations, Christmas decorations, women's apparel, men's apparel, kids apparel, baby stuff, diapers, wipes, home furnishings, patio and garden furniture, kitchen and dining equipment, video games, Apple equipment or electronics in general, toys, sports and outdoors, groceries, like I mentioned before, beauty products, household essentials, your soaps, your shampoos, your dishwashing detergent, stuff for your pets, chew toys, that sort of stuff. They are a store, right? A lot like a Walmart, or if you're in Michigan, a Meijer's. We have a Meijer's that's very similar to Target. And then obviously stuff on clearance. Again, check them out at their homepage if you want to know more about this company, but you are probably well aware of what they do. Now, the reason we are taking a look at them, down 3.78% on the day. We are talking about Target Corporation, ticker TGT, out of the consumer discretionary sector. Closed out the day at $150.91. 52-week range as low as $105.23, as high as $181.86. They are leaning more towards their 52-week high than their 52-week low. They are not within 15% of a 52-week low at all, or even really close right now. Market cap of $69.507 billion. Beta of 1.24, so they are more volatile than the overall market. You can see that volatility today. Huge drop, recovery, big drop, and then pretty much looked like maybe started to try to recover here towards the end of the day, and then further drop. So very volatile, more volatile than the overall market. 1 being the market, anything over 1, more volatile, anything under 1, less volatile. Price to earnings ratio, PE ratio isn't actually bad on this one, $15.59 per share. EPS, earnings per share, sitting at $9.68, pretty good. Earnings date, November 20th, so tune back in next month, about a month from today actually, to see what their earnings report says. Forward dividend is $4.48. Divide by 4, they are quarterly payer, or we'll look at the dividend per share per quarter here in a little bit towards the end of the video. Starting dividend yield is nice, 2.86%. Ex-dividend date, November 20th. They do pay out December 10th. So you would be in line for the next dividend if you were to buy them now, though you're going to have to wait a couple months to get it. 1 year target estimate for the stock price, $177.24, at least according to Yahoo Finance. I'm not affiliated with Yahoo Finance, just one of the sources I go to for information. Jumping over here to the right, we're going to look at dividend yield theory to see if this one is potentially undervalued. To do that, we take a look at their 5-year dividend yield average at 2.25%. We compare it to their current 2.86%, or over here where it says forward, 2.86%, same number. Since it is higher than their 5-year average, that actually speaks to undervaluation. So at least according to dividend yield theory right now, Target is potentially undervalued. Payout ratio is 45.45%. I like under 75%, so this beats the metric that I'm looking for. It gives them plenty of room to continue to raise that dividend, and they are not in danger of cutting it, at least where they sit now. Now, dropping down, we want to look at free cash flow. I like growing free cash flow over time because typically if you have growing free cash flow, you have growing dividends as well. So 2021 here, you can see $7.8 billion, 2022 down to $5 billion, 2023 up to down even further to negative $1.5 billion. They must have had some write-offs or charge-offs there, something, because that's not good to see a number in the negative. And so far, 2024, $3.8 billion. So it does look like their free cash flow is up and down. They are repurchasing shares. 745,000 here in 2021. They jumped that up in 2022 to 7.1 billion. So you might want to look and do the math a little bit. That looks like it would more than account for this drop in free cash flow. Now, same thing if you go to 2023, negative free cash flow, but a lot of that could be accounted for here in this 2.6 billion, which is strange that they go negative unless there's some write-offs or charge-offs, and still repurchase shares is odd. But it's definitely not the same as 2022, and overall 2024 doesn't look like they've repurchased any shares yet, and that number is up slightly from 2023, or up significantly from 2023 actually, but still down from where they were in 2022. We'll have to wait to see how the rest of 2024 shakes out since we're still in it, but it does not look like they have growing free cash flow. It's up and down a little bit. Now, jumping over to stockanalysis.com, this is another source I go to for information. You pick any sources that you like, but I do recommend more than one source so you can make sure the information you are reviewing is accurate and up to date. Sometimes they're behind the times on updating information. Sometimes they're just plain wrong. That's why I always recommend more than one source. Now, they do have 30 analysts that have taken a look at this. They do call it a consensus buy. They have a low estimate of $116, which would represent a 23.12% decrease from where it currently sits. Average estimate of $177.77. Pretty close to what we saw with Yahoo Finance on the previous page. That would be a 17.82% increase from where it currently sits. And if it happened to hit their high of $210, that would represent a 39.18% increase in the stock price. All the while, you could collect that 2.86% dividend yield as you waited. Now, jumping into statistics, we're going to look at how efficiently the company is reinvesting its capital back into itself. To do that, we look at return on equity, ROE, and return on invested capital, ROIC. And I like 10% or better for both of these metrics. ROE sitting at 33.97%, good number there. And return on invested capital over 10% at 12.18%. So both metrics there would get a check. They're tied together. EPS growth, I like 5% forecasted over the next 5 years or better. They're sitting at 7.99%, so good there. And revenue growth forecasted at 3.3%. Overall, good numbers. I just don't like the price per share right now, even though dividend yield theory says it's potentially undervalued. Now, again, they're a quarterly payer. Dividend ratio or payout ratio 46.28%, so lots of room to continue to increase that dividend. Dividend growth is slow, 1.83%. I do wish they were growing it a little faster, especially with such a low payout ratio. Growth years 53. Buyback yield is negative. You want to see a positive buyback yield. This means that they're not buying back shares at an opportune time or efficiently. Shareholder yield 2.81%. Now, going back in time here, you can see they do pay a March, June, September, December time frame. And going back to May 17, 2022, they were paying 90 cents. They jumped that up August 2022 to $1.08. They jumped it up again August 2023 to $1.10. Most recent raise in August 2024 was $1.20, and they've already announced the payout for the November payment will be $1.12. I think I said $1.20. $1.12. They raised it up August 2024, and that's where it continues to be $1.12. November 2024 will be the next payout. Obviously, the payout will be December 10th. That's the ex-dividend date. You want to be buying the day before, at least a day before the ex-dividend date. So November 19th or sooner if you want the next dividend on this one. All right, let's jump back over to the screener, see how this one stacks up. Understand the business. We got to check there. Growing free cash flow. No, up and down a bit there. Growing dividend, yes, it's growing, but it's slow. Dividend payout ratio is under 75% at 45%. Dividend yield theory actually says it's potentially undervalued. It is not within 15% of a 52-week low, so no check there. Return on invested capital, return on equity, both over 10%, and earnings per share growth greater than 5% over the next 5 years. So we're looking at 1, 2, 3, 4, 5, 6. This one is on my watch list. I'll be honest, it has slow growth. So for me, I prefer keeping a company like Procter & Gamble in my portfolio over something like this because their Procter & Gamble's growth is actually a little bit faster. I don't like to have any more than, let's say around 30 positions in my portfolio. Right now I'm kind of in the, if I add something, I need to take something out and replace it with one. So right now, I'm not really looking to add anything, especially with Target's price right now. Now, if Target was to drop down back into the hundreds or into the 90s or 80s, possibly there. But right now, it's just a little heavily priced for me. I'm not looking for anything in the consumer staple or the consumer discretionary sector, and it just does not have very fast dividend growth for my liking. Well, let me know what you think of Target in the comment section down below. Is it one in your portfolio? Is it one you're adding? Is it one you're waiting for more of a pullback? Or is it one you're potentially selling? Would love to hear from you in the comment section down below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Come on out of the shadows there. I know some of you watch the channel. You are not subscribed. When I look at the metrics, my metrics for my channel, I see a lot of viewers who are not subscribed. So help me out here. Help me grow the channel. You can do that by clicking that subscribe button, click that notification bell, click the thumbs up, drop a comment down below. And again, watching the videos in its full duration really helps as well. And I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Target, again, drop it in the comment section down below. I'll work it in the rotation on a day it pulls back. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes with those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion and investing in your educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.